brackets. And I always joke, how do you simplify the tax code? You go from 7 brackets to 7 brackets, right? That makes sense. And so anyone who thinks they simplify the tax code, I would caution you on that. But yeah, so I mean, the big difference being they kept the 7 brackets, they dropped the top bracket by a couple %, but they also stretched out a lot of the middle brackets, and that's where a lot of the savings for a lot of our clients are coming in. You can see you were at the 33% bracket at $233,000. You're at the 32% bracket at $316,000. So you have another $100,000 of income that's being taxed at 24% instead of 32%. That difference in the brackets makes a huge deal on a lot of people's returns, and it's where a lot of the savings is coming from. They did double the standard deduction, eliminate the personal and dependent exemptions. Again, probably more than we need to talk about here, but there were other changes that kind of affect that. Doubling the standard deduction does make a big difference for some people. It's $24,000, so what does that mean? If you itemize, meaning you have property and state taxes, which are limited to $10,000, and maybe you have mortgage interest of $10,000, and you're charitable and you give $4,000 to your church, you're at $24,000. Historically, you would itemize. Under the new tax code, you're just going to take a standard deduction because they're giving you $24,000 out of the gate. It's not till you get above that you start itemizing. There's been a lot of talk on how that will impact charities and nonprofits. Well, I can tell you a lot of our clients will make sure they let us know every donation that they make to make sure we cover those. They may not get any benefits from that anymore, and a lot of the nonprofits are scared on how that's going to impact them, because that dollar deduction now costs you $1, where before you would justify, well, it cost me 70 cents or 60 cents because I got to deduct it. And in some cases you will, some cases you won't, but I can tell you in the nonprofit world, they are very worried about that change. So other individual tax changes, a mortgage, you can now only deduct the interest on $750,000. It can be a first, second combination, but it's $750,000 of debt. That's down from $1.1 million. If you have a loan before 12/15/17, it's grandfathered in. And so for a lot of states, a loan of $750,000 is a lot of money on a house, right? California, we live in a state where home prices are higher, and so this is having a little bit more impact. It's definitely having an impact on second houses. You have your mortgage of $500,000-$600,000. You want to go buy a place at Big Bear, Lake Arrowhead, Havasu, wherever, and you have a couple $100,000 of debt on that. You're now over the $750,000, and so that house is costing you a little bit more. So that was a big change. That bounced around before they finally settled on the $750,000.
So Mike,
yes.
It sounds like if you have 2 homes, you can combine them for the $750,000. It's
yes.
not like you have to pick one mortgage on one of the
Correct.
2 houses.
As long as the total debt you're paying interest on is $750,000 or less.
Okay, thanks.
So this is the big one: limitation on state and local income taxes. Right? We have high property taxes. We pay a lot of state tax. It's now limited to $10,000 for a married couple, $5,000 for individuals. I know everyone was making kind of their second property tax payment in December to take advantage of it for 17. There were all these stories of, like, in New York, people were like lined up for hours around the block to get their property tax assessment so they can prepay it to get the deduction, because you can't pay on taxes that you haven't been assessed. And so it was just madness in December. But basically, moving forward, your state and property taxes are limited to $10,000, period. So again, for most of our business owners, they weren't getting the full benefit of that because of AMT anyways. So it's not as big a hit as most people think that it is. So miscellaneous itemized deductions, Wally and I talked a little about this. This is a big deal for some of the employees. So a lot of people had unreimbursed employee expenses. They had uniform and travel, all those things that go on there. Those are gone. So that deduction is gone. I don't know how companies are treating that. It's, you know, it's mostly the salespeople who kind of got affected by that. And so there's different ways to handle that, but that is a little bit of a change. So when they come back and say, hey, I lost this deduction, I'm not getting to deduct these anymore, they are actually telling the truth. So alimony, it will not be deductible. Typically alimony was deductible, but after 2018 it's modified and it will not be deductible. Most likely what will happen is the judge is going to change the payments because they take that into account.